A change that you've probably, if you've been watching the show for the last few weeks, you probably know that I am looking to get out of buy and hold real estate. I still like flips. I still think it makes sense to buy undervalued assets, but I am selling my entire portfolio. Everything. Every buy and hold rental property that I have is going up for sale. It'll all be sold by January closing, hopefully. We'll see. It's a lot of work, obviously, to prepare everything for sale and get it all to a point where it'd be all good. But we're in a position, or we're in a situation, I think, where it's not just that the market's overvalued, because it doesn't necessarily. With the way we're seeing things on the inflation side, a number of other factors, there are good bull, catalysts for a nice bull run in real estate. I think prices could go higher. It's not that at all. For me, it's about the fact that I have a lot of equity trapped in my real estate portfolio, and it's a lot of work for me to refinance each individual property and get that equity out. Therefore, my return on equity on my portfolio is not as high as I would like after adjusting for my time to manage any tenant issues, manage the property managers, manage any renovations and cleanups between tenant turnovers, any issues with, the city wanting you to, maintain certain, whatever it is. With rental properties, it's a business and you've got to put time in it. And I don't want to put time in it. It's a bad use of my time. If I bill myself out at $1,000 an hour, which I do, I value myself at $1,000 an hour. If I even spend half an hour a week per property, I'm making negative money if you value my time at $1,000 an hour. So it's just not worth it. It's a terrible return on my capital. And so I'm pivoting and reusing my capital in more efficient places. You'll still see me have a portfolio of real estate that is there for family and friends. So I'm helping a few family and friends right now do some, flip ventures, do some buy and hold stuff. I will still support and back other people in real estate. And I'm happy to do that. I don't want to be associated with it at all. I don't have any operational control. In fact, I don't even want to be involved. Money partner, deal partner, sure. Happy to do that. Will I own my primary residence, my personal estate? Yeah, of course, I'm going to continue to own that. Is this part of a shift to leave Canada? Maybe. And people are going to, they're going to jump on here and say, Mike's always, saying he's going to sell his portfolio. I don't know if he'll actually do it. Well, I'm actually seriously considering leaving Canada for tax reasons. And I'd probably come back to Canada 5 months a year, but 7 months a year, my primary residence would be, from a tax perspective, non-tax resident. It just starts to make sense the wealthier you get to not be a tax resident in a place where you get destroyed on taxes. So yeah, if you guys have any questions, by the way, just shoot them down at the bottom. I'll try my best to answer whatever questions you might have. Noel says, yo, Mike, what's up? Hey, good to see you on. Jawad says, hi, Mike. If I change my rental house to my primary residence, do I still have to pay capital gains? So my understanding of this, and you talk to an accountant to get a formal, proper answer, but my understanding is that the point at which you move into your rental property, you've had your rental property for a year, okay, you could likely just get away with it being entirely tax-free because you have the +1 rule when you're calculating capital gains. But if you've had the property for a number of years and you're moving into it, you'll have to get it appraised and then pay tax on the value at the point at which you move into it. So effectively, that means that you'd pay a tax up until the value at that time. Luckily, appraisers are conservative. So they typically come back lower than market value, almost always. It's in their genes. It's actually in their best interest to always come back in lower because then they don't have a situation where they could get sued for going too high. They never get in trouble for going too low. So appraiser always will be on the low side. So get it appraised and don't try that hard for the appraisal. Boom, now you get your value. You pay tax, capital gains tax up to that point, and boom, now everything after that point, when you go to sell it, is tax-free. So yes, you can turn your rental into your primary residence. You can do that. I did that on a rental property in 2017. The problem is I was only there for like 2 years. And so I ended up just paying the whole full tax on it, not declaring that I was a primary residence person there. Because I had moved so often between houses, it just didn't make sense in that situation to claim it. But yeah, you totally can. It just depends. Like I think in my situation, I moved into one of my rentals. It had been a rental for like 2 or 3 years. I moved into it, lived in it for a year and a half. I just paid the capital gains tax on it because I didn't go through the formal process of getting it properly appraised. And so unfortunately, any of that additional value, I didn't pay tax on it when I moved into it. And so I learned the hard way. So learn from, that's what this channel is all about, is learning from my mistakes. I learned the hard way that if you don't, get it appraised and then pay tax up to that point, the additional amount isn't tax-free. So you have to actually record that difference. You got to make sure that you're tracking how much of it is the value attributed to you being living there, because that value is capital gains tax free here in Canada, is my understanding. Good evening, Will. How's it going? Sorry for the title not being very spicy. I have a friend over. It's my birthday, and I have a friend over who's visiting from Newmarket. He surprised me today, and so this will be a short episode tonight. It's actually kind of great if not a lot of people tune in. I almost intentionally took a title that's not spicy at all. That's just super long. The algorithm hates long titles. They hate stuff that's not clickbaity or catchy. So I almost intentionally did that so that it would be a little bit shorter stream tonight. So if you're wondering, why that is, it's intentional. But if you do have any burning questions you want to throw out tonight, I'm more than happy to answer them. To give you an update on the stock portfolio stuff, I did create a group on Facebook called Rosehart Stock and Options Mastermind Group. And if you want to join that, feel free to join that. It's just a free group for now. I would like that group to evolve into a place where we're sending each other stock signals, and we can look at those signals to then play options, whatever types of option plays you like to employ on certain positions, or buy those equities if they're affordable. It's hard to watch every stock. There's thousands of stocks. It's hard to watch them all. So together we can collectively watch and say, hey, X company's got a 20% down day today. What's going on? Let's dig under the covers. Is there something structurally wrong here, or is this just a market overreaction? Like Tesla the other day with the negative 13%, it was a bit of an overreaction simply related to some tweets from Elon. Again, I still think Tesla is overvalued personally. I think it's more of a meme momentum play. I'm not a momentum play kind of guy, and I don't like to pay for growth, too much growth that hasn't happened. So for me, it's about finding that that place where I'll be most happy. And I think I'm trying to evolve and build the life that I want to have. And real estate, buy and hold real estate isn't a part of that. Having beholden to tenants, or contractors or any of that, just not interesting to me. I want to have no tenants. That would be ideal. If I have tenants, it's as a passive money partner attached to someone who's the active partner, and I'm really not involved. That's more the role that I would like to have. And I think the best way for me to do that and build a shield, given my public profile, it's better for me to invest in real estate investment trusts, as an example, or back other investors who I find in the community who are doing great things. I have the opportunity now to do that. I have, I'm looking at my real estate portfolio, and it's just a huge bag of money that's sitting there producing me, I don't know, probably my return on equity is like 8% right now, 8 or 9%, because I have so much capital in the deal. It just isn't that strong. Cap rates are like between 5 and 8 in London. So the best rental properties in London are like an 8 cap, which means if you own it in cash or you're a very small mortgage, your return's like 8%. That's not great. In the options world, I can get easily between 2 to 3% a month. In the private lending space, I have flippers right now who will pay me 2% a month, secured against their real estate portfolio. They just don't want to go to the bank. They don't want the struggle. They value their time so highly that they would rather have someone they can call and say, hey, the deal's funded, done, 100% funded. And I have people that I've open lines of communication with where there is, with a lender fee, if they want to borrow for 6 months, they're happy to pay 10% interest for 6 months. That's 20% annualized. I can look at those opportunities where it requires 0 of my time, and I'm secured against the property. I can take the property and sell it at any time. That's a way better investment. I'd rather 20% completely passive than have a situation where, or even 30%, depending on the options portfolio, what I'm investing in, whatever, than have real estate where I'm making 8, maybe with appreciation I'm making 20, let's say. Even let's say, on a good appreciation year with leverage, at least 2 to 1, I'm making like 30 or 40% real estate returns annualized. I don't even want that, because the stress associated with dealing with all of the cleanup and the headaches in the rental properties and all that crap, it just is not something that is, it's just not worth it for me. I value my time so highly now. I'm getting to a position where in the next 5 years, I want to get my net worth to 100 million. That's my current plan. And buy and hold real estate will not get me there. It's a safe play that requires a lot of time. That it's basically sucking away my mental bandwidth. I can't tell you the number of times I've been on the phone with Rogers trying to fight about, or Bell, fighting about internet because the property manager can't get through and the tenants can't get through, and I supply the internet for these students. Or I can't think of the times where I've had to fight with the city about a rental license issue. It's like you have to get drawings done to scale of every floor. It's just, there's so much you have to do in real estate in the background, I guess, to have it run. and it just doesn't produce enough for me. When I valued my time at less than 100 grand a year, like if you're right now watching this video and you're just getting started, you have less than a couple million bucks, you got like, you know, a couple $100,000 or something, and you're making 40 bucks an hour, real estate's a great little business and it's safe. It's hard to lose money in real estate. So it's a safe way to build a business and a great foundation. I love real estate for that. It gave me my start. You know, my first few million were all, has all been real estate. Have I invested in businesses and other things and done well? Yeah. I've made 7 figures non-real estate in the last 12 months, right? So I'm just not finding the same growth, and I'll still flip. Like I got my brother as an example, you know, shout out to my brother in Sarnia. He's my active partner there. He's crushing things. As an example of one of the partners that I have, he's crushing things. We just did 3 flips in Sarnia, and he's a monster. The guy goes in and, you know, we kind of grew up together. We had a rough childhood. He's my stepbrother, so we're not actually blood related, but we're basically brothers. And you know, we went through a lot together, and so we have that trust there. But he's getting there, like, so I have full trust in everything he's doing. I don't have to worry about anything, is the point that I'm making here. He gets in there at like 10 in the morning and goes till 2 in the morning and grinds like 15 hours a day. He's still hungry, and he's okay to make, like, if he makes 200 grand or 300 grand a year, I'm changing. It's like that's changing his life. I'm involved in watching him climb the ladder. That's fulfilling for me. And guess what? No shit rolling down my back. He takes care of everything. I don't have to get involved at all. I walk the property once, maybe twice. We have a little bit of text communication. It's great. That's the kind of partnership I'm looking for. And I'm making great money too. I'm making, you know, 40, 50, 60, 70% return on capital. I continue to use my skill set to, you know, find deals, my connections to find a few deals that people call me. I still have, you know, I planted seeds years ago. Like I was dropping flyers in 2016, 2017, building network connections, and I have those connections now. And so the odd deal falls in my lap. You know, someone's like, hey, I got a duplex for 200 grand. You want it? I'm like, yeah, we'll close it in cash. No problem. Take care of you. And then I can hand it off to him. I don't have to worry about any of the stress. He takes care of all that. That's the kind of partnerships I want to have. It's not really about, for me, it's not really about trying to squeeze out a little bit more return on investment. It's about reducing the amount of time I have to spend. That's the best way for me to grow and get ahead. And I realized for me to get from where I am now to 100 million, I basically need to make very smart strategic decisions. And then to get from 100 million to a billion, you know, before, I guess I'm old. At some point when I'm old, my goal is to get to a billion. Around 70, I was hoping by the age of 70, I'd have a billion. With inflation, that might not be so much. That might not mean as much as it does now. You know, if we're looking at inflation statistics year over year, we're looking at like around 10 to 15% if you use the same metrics they used to calculate inflation in 1990. So they've changed the way that they calculate the basket of goods in the CPI index. So they're basically masking the fact that we're in there's real inflation in certain sectors right now. It's wild. In other there are certain sectors people will point out where things have gotten more affordable. As example, like TVs and electronics have gone down in price and you're getting more for your buck and blah, blah stuff. But and there's certain food categories where things haven't risen that much, but by and large, we're in a large inflationary environment, and I think that's going to push. You know, I'm hoping I can use leverage to push to new heights. So, anyway, that's one chapter. I think part of me getting there is buying businesses. I'm actively looking for opportunities where I can, you know, make some small strategic changes and make big returns on my capital, and that means empowering people. And I realize that I can't do things myself. It's not about doing things all myself. It's about, you know, finding ways to not just outsource, but empower people. That's how I get to the next level. And so I've got to stop being small-minded, and owning rental properties forces me to be small-minded. So I'm trying to shed that skin in the same way that I'm trying to get rid of all my tools. So I physically can't use my drill, can't use my hammer anymore, and then I'm forced to outsource it. It starts to create habits where I can only do high-value tasks. And the things that you can't outsource, like family, like you got to do that stuff. But things that you can outsource, you know, you should. As you want to grow to a higher net worth, you can't be doing that small stuff and continue to grow. So it's a change in mindset, and that's why I'm selling. But for a lot of people, you know, myself, even 3-4 years ago, I'd be all over, you know, trying to find opportunities where I could partner with someone and be a zero down deal. And there are a couple opportunities I have where, you know, there's a couple properties that I could get rid of where it could be a near zero down with a vendor take back mortgage covering the down payment, but only about 2 of my properties that would make sense on. Yeah. I couldn't get in the group, the Facebook app earlier today. Can you link it in the chat? Well, I don't know how I'd be able to link it in the chat while I'm streaming, but if you just basically go into Facebook groups and type in Rosehart stock, it'll come up and you'll be able to find it. If you type the whole thing in, people are having trouble, but just type in those keywords, you'll find the group. You can request to join, and then every day or two, I log in and approve people. But I expect that to be an open forum. People share everything that's going on. I eventually hope that group will also be a place where I could set up some sort of I want to call it like a mastermind subscription, so to speak, but really it's designed to be a place where we can go on trips. So it'd be really cool if we could set up a thing where we, go to destinations and do like 2 week long vacations. And maybe we have a couple days in that vacation that are designated to learning how to options trade, or, just discussing strategy, just networking. Like, I want to make it a business write-off and enjoy and have a fun time. Like, those networking events are part of something I've been wanting to do in retirement. That was one of my retirement goals, was to spend time doing things I like, hanging out with people that are on a similar wavelength. And so I think that group could become that. It has to be a business, though, to be deductible. So it has to be a source of revenue. So whether that's, thinking about how to make it a business, it's like, do we do masterminds? And, we pay a subscription, or we just do a one-time event price, and we all come down to like Costa Rica or Florida and we have fun. We rent a mansion or something. And then you guys can all write it off against your options trading, income, or whatever, your rental real estate income, whatever you're there to do. Ideally, it's more stock stuff. But yeah, it's pretty sweet, right? So I feel like that's something that, oh, cool. Got a $5 super chat. Osman says, thoughts on growth investing versus dividends with DRIP, only TSX stocks. So I guess if you're looking at dividend investing, you'd be wanting to look at only TSX stocks, because they would be the only ones that would be eligible Canadian dividends, which means basically that here in Canada, if a corporation has already paid tax and they're an eligible corporation and their dividends are eligible, then they would pay out a dividend to you as the investor, and you'd get back a tax credit for the tax the corp already paid. So that would effectively, in some cases, mean that you don't pay any tax at all on that dividend. It's a tax-free dividend. Especially if you're making less than $50,000 a year income, your dividend would be, up to that point, tax-free per spouse. So about $100,000 a year in income, you get tax-free. So it depends on where you are in your journey. If you're retiring and you have $100,000 dividend portfolio on $1 million portfolio in total, right? You're getting $100,000 a year in dividends. You could collect that in Canada tax-free. Canada's a great place to early retire if you don't want to have a luxe lifestyle. If you're okay with like 100,000 or less, which most people honestly should be, like 95% of the population lives on less than 100 grand a year. So the majority, the lion's share of people watching this would be okay to retire in Canada completely tax-free using a dividend portfolio. So the DRIP, to further explain your comment to those who are not familiar, is the direct reinvestment program. So you take the dividends and you the dividends get reinvested into buying shares at a slight discount. Usually being enrolled in that program means you get like a 2% discount on the shares that you're buying with the dividend cash you're getting. It's a great way to compound your dividends and to grow your position in that equity. Typically after they pay out a dividend too, there's a bit of a dip in the stock price, so you can typically get a little bit more of a discount on those equities in those companies that you like, that are quality blue chip stuff. So great question. That said, all of the action and the spice lately has been about growth investing. Like if you look at the Teslas of the world that are up 10,000% in the last 18 months. If you look at, what I really like, I'm just gonna go there and say that, is like there's this weird mega blue chip sector that's like the the Facebook, the Amazon, I guess Meta now, the Meta, Amazon, some of the social, Google, that are mammoths, that are like the largest companies in the world, and yet at the same time on a hyper growth trajectory. So you can buy quality, cash flow strong, blue chip stuff that is also growth. There's a lot of growth baked into the price of Amazon and Google and Facebook, but you're buying a lot of good, especially Facebook right now. I'm hugely bullish on Facebook at $300 a share. I'm long Facebook to like at least $500 a share currently. They're significantly undervalued relative to their peers. I love the pivot that they're making and the rebrand towards the metaverse. Just really bullish in general, and they have great. If you look at like a DCF or you look at some of their financials, Facebook's got a really strong inflation-proof business plan that's filled with lots of cash flow, and they have a really good retention among their users and a good amount of eyeballs on Instagram, Facebook, etc. I myself am a avid user of Instagram and Facebook too. By the way, I got the blue check. I got the blue verified check on Facebook, which is pretty sweet. So now I'm verified. I make a comment, there's a little blue check beside it, which is cool. The main purpose of that is that no one can then fake my account. There are people making up fake accounts using my name, my pictures, and then trying to sell people courses or invest in crypto or something. So there'll be no more of that. You'll know it's me by seeing the blue check mark beside my name on Facebook, which is cool. But yeah, that is not necessarily why I've been bullish on Facebook well before they gave me the blue check mark. But yeah, it's just, I like them as a company. To talk about growth stocks, I think that growth is an important part of the portfolio in a small amount of the portfolio, in my opinion. So like I'd be like 75%, value, dividend stuff, value plays. But I think a quarter of your portfolio could be growth. It could make sense to have some good equity plays that are growth. However, in general, I don't like to pay for growth that hasn't happened. I like to pay for what is here now and maybe a little bit of growth. Right now, I've been finding in the market, there's a lot of these growth companies that are, there's momentum behind them and they're growing like crazy, but there's no fundamentals and they haven't reached certain targets that I'd like to see to prove their trajectory to growth. Tesla being an example of that. That said, currently I have 1,000, I have bear call spread of 1,000 shares short on Tesla, and I have 500 shares on puts that I've sold that I'm long on Tesla. So I'm playing either way, actually. Tesla above 900 right now and below 1,200. I'm kind of strangling it a little bit. Just as an example, Tesla pays very good when it's having those crazy volatile days. There were some great premiums being paid. I don't know. I think Tesla is a lot of hype, but you can, on the growth side, people are riding that hype to insane levels. Look at what's happening in the crypto space. There's some crazy shit coins that are just being pumped right now. And it's all just momentum. People are investing in they see their friend make 100%, they want to make 100%, and it drives it, to new levels. And there's no real underlying reason beyond greed and momentum. There's like speculation. Someone like Apple might invest in said, crypto, and just boom, everything spikes 10%. There's no direct logic. So you got to be careful investing in growth because there is so much DIY speculation, DIY investor speculation, that there's a lot of volatility that goes with that. So I guess it depends on your goals. I think it's important to have, I think it's really, really important to have a handle on what your risk management strategy looks like. Because if it drops 20%, let's say you have $1 million portfolio and you're all in growth stocks and it drops 25%, are you comfortable with a $250,000 loss in 2 days? Can you sleep at night knowing that you just lost $250,000 on your portfolio? If you can, you got those diamond hands. I don't. I got like freaking like paper hands. If you have those diamond hands, then cool. Go for it. Do your research, obviously, and look in the companies, look into their financials, look into what analysts are saying about them. Look at market trends too. I think if you pick, there's certain sectors. I think that if you were to invest heavily in those sectors, you'd be doing well 5 or 10 years from now. There's certain macro trends you can invest in that will just bear a lot of fruit. Okay, next question was, Mike says, instead of a formal appraisal, would a letter from a real estate agent summarizing the market value based on comps stand up to a CRA audit? I don't know. It's better than nothing. I think a CMA, so a current market analysis from a real estate agent, would be, I think that would be something that would help in an audit. It might satiate them. At least you went to the effort to do that. I think the most important thing is the minute you move into it, in that tax return year, you better declare you've made that your primary residence and then pay the tax in that year. And I think you'd be okay. I didn't do that, didn't know how to do that. So I just, filed the tax return, not paying the tax on the appreciation up until that point. And so that was where it was like, okay, it's done. I lost my primary residence, exemption on that property. And it's fine. It wasn't much. It didn't appreciate that much, the property. Back then, markets weren't appreciating that heavily in 2017. So yeah, let's do the next question here. Thank you for the wishes, guys. Mabad says, hi Mike, I'm 20 and I live in Toronto. I want to start investing in real estate, but I don't know how to start. Could you give me some advice? I know about money saving phase already. Yeah, so what do you do with your capital? I think in the beginning of the journey, you can invest in real estate using like interactive brokers. You can invest in REITs as an example and expose yourself to leverage 2 to 1 as an example and be investing in real estate without having to qualify for a mortgage. It's important if you want to get into real estate investing to find a partner who can qualify for a mortgage or to build a solid, foundation of income and a good credit score that you can then go to a lender and get a mortgage, because investing in real estate requires, for it to be profitable, requires you to use leverage. And leverage means borrowing other people's money. Um, Ideally the bank's money, because it's the cheapest money you can get. It comes at like 2% interest. So that's the game of real estate. Making money in real estate requires you to find good deals under market value, put in the time and effort and energy to transform those properties into something that's, desirable to other investors and producing cash flow. And the third is being able to use other people's money, the bank's money primarily, cheap money, to buy that asset. And then you make a difference on every dollar you borrow that you invest, and say it makes 8% return and you borrowed at 2%, you make it that 6% spread. And that's how you make money in real estate. It's really about borrowing money cheaply. If you can't borrow money cheaply and you have no one to partner with and you haven't built a network out yet and you're not going to be able to qualify with the bank, work on that and then invest in stocks. And while you're investing in stocks and building up your portfolio, then you can work on the other piece. So they kind of go together. You really need that leverage piece for real estate to be attractive. It just doesn't make sense without a bank mortgage. Owning real estate in cash is just a terrible proposition. It's a terrible return on capital. It just is what it is. I would be nowhere without banks. They made me who I am. Like, I borrowed all their money. I borrowed, probably in my time, I borrowed like at least 8 figures from the bank, from Lender Bank, 10 million bucks at least. And I probably, let's say you take that bank's money and you make 50 or 80% on it, then you get to have all that for yourself right after the cost of interest, which is basically nothing in the grand scheme of things. Harriet says, do you think it would be too risky to just buy the top 5 companies? I read an article, interestingly, recently that said that buying the top 10 companies in the S&P 500 has outperformed the S&P 500 in the last decade. So yeah, I mean, you could just do that. Yeah. Another question was, do you have any YouTube recommendations for tech people in Canada? I'm a good earner, but I feel like I'm already at the top of the market at 29 years old. I wonder how to progress from there. It's a good question. I don't know that I follow any tech people in Canada. It depends what your goals are too. Like, do you want to grow within tech, or do you want to invest in like small businesses in tech? There's lots of ways you could invest in a lot of startup stuff and apply your tech skills to make great returns. Like, if you have high value skills and you can apply those to a business that you own equity in, you can make insane returns in this market. Astronomical returns. So that's where I would say you should invest if you have talent, you shouldn't be a salaried employee. You should have an equity stake and be involved in something you're passionate about and put those skills to use where you can make 10, 20, 30, 50 bagger type returns. I know people in the tech, I have a few friends in the tech space who have got into their own startup companies. And by startup, I mean like less than $20 million companies. And they have significant portions and they're making, great returns. So, hey, Sony, how you doing? Harriet says, real estate investing doesn't really make sense for someone living and working in Toronto. Is leveraging the stock market investing the second best way to build wealth in your opinion? I think that everyone, has the ability to buy a primary residence here in Canada and use that as a tax vehicle to build wealth with leverage, tax-free, even if you have to buy in the outliers. Like, you could go to within an hour of Toronto, there are houses for sale for $300,000-$400,000. In Hamilton, there's still houses for sale for $300,000-$400,000, and everyone in Toronto is an hour from Hamilton. So anyone could buy a property, or you can go, towards like Pickering, or there's a whole bunch of areas you could go, Peterborough, et cetera, so forth, where you can buy property if you're in Toronto. And I think everyone should buy a primary residence and enjoy that tax-free lift. But beyond that, yes, I think you're right. The next best way at scale to grow your wealth is probably levered stock trading. You can also invest in real estate using your Interactive Brokers stock account. You can go buy a real estate investment trust and invest in real estate in Canada that are already levered 2 or 3 to 1 because they already have mortgages on all their properties. And then within Interactive Brokers, they allow you to borrow 3.34 to 1 on every dollar you invest into any publicly traded, most of the publicly traded REITs. So you can invest in Canadian real estate. You can buy REITs that just buy residential real estate in southwestern Ontario. Not even the commercial REITs. You can find a residential REIT if you like residential stuff. And then you can lever up 3-to-1. So you'd effectively, if the REIT's levered 3-to-1 and you get into it 3-to-1, you'd be 9-to-1 levered. That's like 10% down investing in Canadian real estate. So if Canadian real estate jumps 20% again, like it did the last 3 years in a row, it's been more than 20% every single year for the last 3 years. If it did that again, which inflation is sort of making that it's going to happen. Inflation's going to push it. Is it real growth? I don't know. Inflation is pushing building costs to all new highs, and then those construction costs are passed on, and the price of real estate jumps up, right? But I think that'll continue. For sure, it's continuing. It's happening right now. October's inflation numbers were terrible. Real estate is pushing up. That's just a fact. I should probably hold my real estate portfolio for longer, but I don't care. Like, I have enough money. I'm good. I just don't want to call from a tenant. That's worth even 10 grand of appreciation, 20 grand of appreciation to me on every single property. I don't want those calls. And I believe that I could take that capital and double it in the next year in the crypto space, in the stock options space. There are places where I can put that capital and make great returns. I could be wrong, but at least I'll be happy. I won't have any stress waking up to calls from tenants or property managers. Anyway, so yes, I think that levered stock investing is an amazing thing. Interactive Brokers has changed the game. When I was investing in Questrade in 2010, I was like, in 2010, I just turned 18. In 2010, I just turned 18, and I was at Western in my first year, and I was investing in stocks through Questrade, and I was borrowing at 8% on margin, 8% interest. It didn't make sense to stay on margin at 8% interest because the dividends they're paying like 4 or 5% max. Now, Interactive Brokers is lending me at 1% interest. I can go borrow on $1 million portfolio $700,000 on a line. Auto approval, doesn't show up on your credit bureau, free money anytime you want to go buy more stocks or just use it to invest in whatever. Buy these companies, obviously insure the portfolio. If you're going to use all your leverage up, be damn sure you got some insurance. Buy some puts, right? Whatever. Protect yourself. Anyway, or sell calls to protect yourself. If there's a down market, you can at least close those sold calls out and use that to pay the margin down on your margin line. But you can borrow at 1%, and most of the blue chip quality companies right now are paying 4, 5, 6% dividends. So you can make a 500% return on Interactive Brokers' money. Why wouldn't you take their money? The bank doesn't even lend against real estate as cheaply as Interactive Brokers is lending against blue chip companies right now. It's just ridiculous. And I think it's the next best thing since sliced bread. From a return on time perspective, it's a great way to build capital. Even if you just use your leverage to buy quality blue chip stuff, in 10 years, you'll be way ahead using leverage. If the market appreciates 20%, and let's say you're levered even like you use 50% of the margin that's available, you'd have, if the market goes 20, 30%, you'd be up 40, 50, 60%, like safely. It's hard not to get with those kinds of returns, it's hard not to use leverage. So be careful when you use leverage, but it's so cheap, it's hard not to use it right now. I think anyone who isn't using margin right now at Interactive Brokers is a fool and is missing out big time. Use it responsibly, but use it definitely. Thank you, Harriet, for the question. Omar says, do you think buying land in Canada is a good idea? And if it is, should it be landscaped or not? Omar, it depends where you're buying the land and what you're looking at. A challenge in buying land right now is that there is HST on land. So you pay 13% tax on a land purchase. So you buy a piece of land for $1 million, you pay $130,000 in HST on purchase. What I like better is to buy a house, a residential house, on a big piece of land. Even if the house is like a near tear down or in terrible condition, because there's no HST on the purchase of that. And you can rent the house out and it'll cover itself. Whereas land doesn't cover itself, unless of course it's farmland, in which case it still barely even covers the mortgage payments. And you can't lever it up very well. A piece of land with a house on it can go 80% loan to value. Farmland is like 65 typically. So the prospects in buying land aren't as attractive. That said, I love owning land. And when I buy properties, I look at the undervalue, like the land under the building, and that's important. So am I bullish on that? Yes. They're not making more land in Canada in great areas. And if it's landscaped, that's a bonus. This house I live in now, I truly believe this estate that I bought in West London, I paid just for the land. The entire 7,000 square foot house came for free. I bought just it's like close to 1.2 acres of really well landscaped acreage in core West 5. Honestly, I could sever it, and each of the lots is worth 500,000 or 600,000. It's almost my cost base. So this was a no-brainer. Like looking at this as an example of a recent transaction, I think it's the most recent. No, I bought 2 more properties after I bought this house, but 2 flips. But yeah, it was one of the most recent personal purchases that I've made, and land was an important decision. It was like that's the underlying value, I think, long term. Buildings will depreciate over time, but land holds its value. But am I a land investor? No. I'm all about cash flow. Karan said, I would argue a lot of the FANG stocks, which is like basically the big 5 I was just telling you guys about, stocks, price performance is due to passive flows, basically a magnet for new money, given they are so heavily weighted in the indexes. This might be true, and it is pushing them to all new highs. That said, they're taking that capital and they're putting it to good use. And I think those FANG stocks are the future of everything. You know, our entire businesses are going to be, we're going to interact in the metaverse. So when you own all of that real estate and the infrastructure behind that, Amazon, as an example, stores everything, all of our data in the cloud. Amazon is not even really a, direct to consumer, seller of goods. They're really about the data infrastructure. And that's what I love about a company like Amazon as an example. So yeah, I mean, you're right. Are they at all-time highs? Yes. Is it, yes, could be. But I still think, if you don't, you'll miss out on a ton of growth in the next 5 years if you just sit on the sidelines in cash. And if you are a doomsdayer and you're worried, go buy the VIX. Like, go out there and buy VIX. It's basically a short-term volatility spike hedge. So if you have $1 million portfolio, go buy $100,000 in VIX. It's pretty cheap actually right now. VIX is like $16 or something. And anytime there's any recession or anytime the stock market goes into a lot of volatility, the VIX is the volatility index basically. It spikes and it'll go 6-7 times your money. So you put 100,000 in it, and we go through another 2020, like last year, the whole COVID thing, or pick any recession. VIX, if you look at the chart, went 7 times in like less than a month. So if you have 100 grand in that and your portfolio dipped, your 100 grand would turn to 700 grand. So yeah, your portfolio will go down 20, 30%, whatever. Like a real crash in the market is 20 or 30%, right? But your VIX would be up 6-7 times. So I think that's a great hedge in your portfolio to cover any margin calls. I personally hold VIX in my portfolio. It's a nice hedge. If you believe that, you should buy VIX and keep it in your portfolio, while still enjoying the ride of all the FANG stocks. Brandon, yeah, I mean, if you want to get me a smoothie. I don't know about mango, man. I'm all about the berry right now these days. Very, very berry kind of guy. And I got into booster juice again. I used to have a big addiction to booster juice in university. In first year university, I had a huge addiction to booster juice. It was bad. Every Tuesday, Thursday before class, I walked by one and I had to buy one. It was not frugal. It's before I made my conversion to full-on frugal in second year. Hong Kong Fui says, are you concerned about IB increasing your maintenance margin requirement during significant downturns? Have you researched their history of doing that in the past? Yeah, so typically they will do that on certain companies. It's not broad-based, but yeah, I mean, it's definitely possible. I don't recommend going 70% loan to value. I think that, even them just reducing their margin requirements would spike the market a little bit on the VIX as an example. So have those, buy puts or buy the VIX and have that there. If you got $1 million portfolio, buy $100,000 in VIX. You got a $5 million portfolio, buy $1 million in VIX. If you're worried right now, and you put 20% of your portfolio into the VIX, and the next time it spikes, you're gonna be calling out Mike Rosehart saying, "Thank you, Mike. I just made 5x on that small hedge investment that covered all my losses while it was dipping. I was able to sell the VIX off and then double down on the quality names." So yeah, just hedge your portfolio and be careful. I think that's the most important thing. Hey, no problem, Colton. Happy to help. There you go, James. James and KO Norst can chat. That's what it's all about. Build a network. People coming together. If you guys come with the next latest and greatest tech idea, you better reach out. I'd be happy to get a 1% piece. Happy to buy in a little bit. Mabad says, at this point in your life, I'm really curious about your life goals. Would you mind sharing your life goals at the moment? My family is everything for me right now. So more time with them is I can't outsource that. I can't outsource spending those quality moments with my kids, like running around the kitchen, playing tag, or we were doing that yesterday, and like those kinds of things I love. That's stuff that is part of the goal, and I'm there for my kids. If I to be a good dad, it requires probably 6 hours a day, 6 to 8 hours a day, I would say, that I have to spend with my kids, which leaves me only a few hours for options trading, which leaves me nothing for any of the real estate stuff. So I'm cutting out what's not valuable, and the real estate isn't moving the needle for me like it used to. It got me to a point where I'm hella financially independent. Like on the financial independence scale, I could lose half of everything. I could lose like 80% of my entire portfolio and still be fire. So like that's a scary thought. It's hard to still be frugal when you put it in those types of perspective. So I try to just frame everything in an abundance mindset where my time is the most valuable variable, and that leads to different decision making. But life goals, I don't want to be in Canada in the winters. I love having the ability to provide for my extended family, my brother, my mom, my dad, lots of friends that I want to bring with me. That's important to me. Yeah. Yeah, I'll do a video about that, about some of my goals. They're not all monetary, but it's fun to grow. Will says in the U.S., October inflation numbers at 6.1%. Not to mention that's just what the CPI is including. Exactly, it is a scary time. That's year over year, October to October. Canada's even worse. SEO Sam says, does anyone know of a U.S. equivalent to Interactive Brokers? Interactive Brokers is in the U.S. as well, I believe. So look into that. They're like everywhere, pretty sure, like almost every country. Omar, no problem. Happy to help. Karan says, where do you think residential real estate is going in 2022, 2023 with Bank of Canada raising rates in the near future? I think, it's just my prediction, but I think that immigration is going to continue as Trudeau continues to open up the border and continue with his plan to immigrate 1 million new international people into Canada. That's going to put a real strangle on the supply as demand increases. I also think the government's not going to open the gates anytime soon to new builds and helping it be easier to build here in Canada. Right now, it's really difficult to build and build quickly and add units. Most municipalities are not very open to adding bedrooms, adding units, basement apartments, etc., so forth. Especially here in London, they're not in favor of that at all. They make it very hard. A lot of hoops to jump through to develop and to add. They make it very hard, and they have units, like if you have a basement that has 8-foot ceilings everywhere, but in one area of the basement there's a 6'4" bulkhead. Under 6'5", it's 6'4". You can't rent that unit out, period. No one can live in the unit. And if they rent it out, they make you bar it off so no one can. That's a stupid fucking rule. There's lots of people who are 6'2" who would walk clean out of that bulkhead, and the rest of it's all 8 foot, it's fine. There's no way to make that legal. You have to go to fight with the city for a minor variance for a year to make that unit rentable. There's a lot of units like that that could be put on the market that won't. A bunch of other reasons why there'll be supply side issues, and there's an increasing demand side as well with new immigrants coming to Canada. So I think 2022, 2023 is a squeeze on the price of real estate. The rising interest rates in the beginning of the spring of next year is going to be like pouring freaking gas on that problem. Because when you raise interest rates, everyone locks in 120-day rate holds. So what happens is as soon as the Bank of Canada increases their rates, everyone locks in 120 days, and then they have a panic attack of trying to find a property to buy. So typically what happens each time you raise interest rates, the price of real estate skyrockets and then plateaus, skyrockets and then plateaus. So we're going to have this supply side issue that's already squeezed. We've never had so low inventory. We have 0.5 months of inventory here in London. Like half a month of inventory available. If people stop listing houses, in 2 weeks we'd have no houses for sale. That's the supply side issue we have to deal with right now, and it's only getting worse. And it's COVID supply side issues and increasing cost of goods. You can't even get a lot of stuff right now. You're trying to order like a garage door, trying to order some like plumbing parts, and like, oh yeah, we're back ordered on these essential plumbing parts that you need to like install a toilet. We're backed up like 16 weeks. It's like, what? You can't even get, like, yeah, we say that for our preferred clients. You might get a part in like 10 weeks. It's like, anyway, supply side issues like crazy. So spring 2022 is going to be on fire. I wish I had the patience to hold my entire real estate portfolio until the spring. I don't care. I'll probably still have a couple I'd be selling off in the spring. Maybe I'll enjoy the rest of it. But I think that initially, when the first Bank of Canada rate comes into effect and they raise it 0.25%, it doesn't matter at all. 0.25% doesn't affect anyone. No one cares. If you're paying 1.5% mortgage right now, goes to 1.75. You're paying, say, 2.5% mortgage, goes to 2.75. Doesn't really affect cash flow that much. A little bit. Like we're talking like $50 for most people. It's not a lot of money. Doesn't really affect things, but it will create an urgency to buy while rates are cheaper and lock something in. So people will be in a frenzy to buy in the first 120 days. So into the summer, we're gonna have a ton of heat. Things will plateau into the fall. There will be negative pressure. I think they'll probably raise, I heard a Scotiabank report that they're gonna raise prime 8 times. So they're saying a quarter increase every time, but that'd be 2% on the high side. That's not going to happen. Bank prime right now is 2.45 at all the big 5 banks in Canada. That they're saying it would go to 4.45 for bank prime. Won't happen. By 3%, 3.5%, our economy is in freaking shambles, and they're reducing interest rates to keep us out of depression. The government has so much debt, it's not even funny. Everyone has so much debt, it's not even funny. The government's stepping in to subsidize by the time we get to 3% prime. So it's not going 8 times. There's not going to be 8 increases. And if there is, it's going to be a severe depression in the economy that then forces interest rates back down, probably this time into negative interest rate territory on the next major boom. Yeah. So what was I going to say? I lost my train of thought, but I guess 2022, extremely bullish on the price of real estate. 2023, neutral. 2024, bullish because of the long-term trends here in Canada, especially in the hot places to live. London's in the top 10 list often. Toronto, Vancouver, especially, will continue to be great places that will hold their value. Real estate doesn't go down in the same way that it goes up. Prices get sticky. People just hold their property as opposed to selling for a loss is what you'll find. They'll hold it and rent it out. It's just the way Canadians are. We don't have that same spike. And because all mortgages here, we have recourse versus non-recourse mortgages. We have recourse mortgages in Canada. So if you don't make your mortgage payment and try to walk away, like in the US, non-recourse mortgages, people just hand their keys to the bank and walk away. You end up with a financial collapse like they had in 2008. Here in Canada, we have recourse mortgages, which means you can't walk away and throw your keys to the bank. Guess what? They're coming for your clothes off your back. They're coming for your car. They're coming for everything. When you sign a mortgage in Canada, you agree to give up everything that you have. Whereas in the US, you walk away, they take the property, they don't come after you. It's a non-recourse mortgage. It's different here in Canada. People don't walk away from their houses because they're legally bound. The bank will take everything and lean against you. Whereas in the US, they just take the property and you wash your hands of it. It's just different. So we won't have that same crash that happened in 2008. Even if those circumstances happened here in Canada, I'm not saying they will. We have a real supply side issue and a huge demand issue, and in the wrong directions, unfortunately, for real estate prices. But anyway, so my read on it, I'm still bullish. That doesn't mean that I want to buy and hold properties. I will shift some of my wealth into REITs. So I will still invest in Southwestern Ontario in real estate. I'll still be doing probably some flips and backing, my brother and some friends and mentees, but I will not be personally holding anything. It sounds douchey, but I'm too rich for that. I'm too rich for that. I can make $100,000 a month. Why do I ever want to talk to a broke ass tenant who's going to be bitching about something stupid? I just don't want to have those conversations anymore. It's a bad use of my time. It's like the janitor doesn't get to call the CEO and bitch for an hour because they don't like their job. In the real estate world, the tenant gets to take me to court and then bitch for hours, right? It's just, I don't want to be in that game anymore. That's for people who make $10,000 a month or less, I think, is the buy and hold real estate game. Unless you get into large multifamily and get really good property management in place, it could be a different situation. But the good property management that I found, they typically suck all the cash flow in maintenance and tenant placements and management fees and markups, and there's nothing left. I'd rather just invest in a REIT that has economies of scale and not have to micromanage. So that's my personal preference. Hey, real estate made me the wealth that I have today. It allowed me to become a 7-figure entrepreneur, an 8-figure investor. I guess I'm not going to say that on this. I'll just say 7-figure. But yeah, so Da, 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 da. Did I miss any questions? I think I got all the questions here. Oh, why buy hedges instead of just delevering a bit? What's the difference? Well, the reason leverage is great is because you can borrow at 1% interest. And the short answer is you work out better off. You're better off using your leverage and then buying insurance, so to speak, than if you were to not use leverage at all. So the net return is higher, is the reason why. Risk management is super important. You got to buy the VIX, you got to buy the puts to protect your portfolio if you're using a lot of leverage. But yeah. Could you cheat the system and rent out your primary residence? I mean, yeah, I'm sure people probably do that. Be careful if you're doing that, obviously. Do it for cash or something. I don't know. That's not advice. I don't know. You should schedule a mastermind for your 30th birthday. Yeah, I mean, I'm technically still 28 right now. It's scary to think that I'm going to be 30 next year. Ugh. But yeah. Yeah, I might as well celebrate it. That'd be a cool thing to do, Tristan. I should do a birthday thing. In some warm beach somewhere next November. December, maybe. Tesla up. Musk started selling 2 days ago. Confirmed. Interesting. So he did start selling shares, which is why the price dropped so much. Interesting. Luckily, I still have a short on it. So, do you have a YouTube streaming schedule? Yeah, Omar. Every single Wednesday from 7 to 8 p.m. I go live on YouTube. I've done it for the last, coming up on 4 years now, and I've never missed a Wednesday. We have hundreds of episodes you can watch. And it's just me shooting the shit, so depends what mindset I'm in that day. Sometimes I talk like I'm crazy. Hold nothing against me. None of it's legal advice or financial advice. You do what you guys got to do and do your own due diligence. But I'm happy to chat. Daniel says, hey, Mike, I know you're not a fan of East London, but would love to hear your thoughts on all the money being invested by Medallion into the Soho neighborhood. Soho was a terrible neighborhood, but it is gentrifying. Though I'm not a fan of East, I do have properties in East London. I have several properties in East London, actually. I have a duplex there, I have a triplex there, I have another student rental. I have another single family that's coming up for sale. Hit me up if you want my spreadsheet to see all the numbers on the properties that I still have for sale. We sold off 4 or 5 now, 6, 7 properties this year, but there's still like, I don't know, 13 more or something to go. So I do have some properties in East, but yeah, I mean, you can definitely get some great cap rates. There are certain pockets that I do like more than others. Ham and eggs I like the least. Rocky says, why are you selling your entire portfolio? If you rewatch the start of the video, you'll see that it's more about the value of my time and alignment with my goals and where I want to be on my life's journey. As you heard, if you guys rewatched the stream about halfway through or last like 20 minutes ago, I was talking about my long-term focus and forecasts for my goals and then the forecast for real estate. And I'm very bullish on real estate prices. Like, if it wasn't such a pain in the ass to own, buy, and hold real estate, I would continue to hold. It's just not that great. I just hate it. Yeah, so I am now officially too wealthy to want to own individual, below 6 units or less. I just have no interest in any of that anymore. And I have no interest in being directly involved. And because my name is Googleable and I'm a realtor, I am held to a higher standard. And my number is easily accessible. So people, aka tenants, call me and find my number. And I'm done with that. I'm a unique individual where buying small-time properties and exposing myself to tenants is not something it's just not something I want to do. I just don't enjoy it. It's just, if you offered me $5 million a year salary to run a property management company and actively deal with tenants all day, I would decline that offer. I would not do property management for $5 million a year. And here I am, still getting involved in doing it for a lot less than that. It doesn't make sense. Daniel says, any recommendations on Airbnb management companies in London? Yeah, I got one that's doing great for me at one of my properties. They're very selective on the properties that they take on. But hit me up if you want me to give you that recommendation. I'm not going to plug them publicly because I don't want to get their inboxes flooded. But if you want to hit me up, I might give you the contact. Yeah. Unfortunately. unfortunately, Eric. It's one that I would also like to sell. One of many that I would like to sell. It's just, oh, I'm so close. I have several conditional offers on like 8 of my properties, so that I may have my entire portfolio sold in the next month or two, which would be great. Which would be great. Yeah. Anyway, everyone, I'm going to wrap this up now. I got a buddy upstairs visiting from Newmarket, and I want to spend some time with the fam jam. Thank you, everyone, so much for watching, and we'll see you next Wednesday. I'll see you on Instagram at Mike Rosehart. You can follow along and join my stock group on Facebook if you're interested. Just type in Rosehart Stock, but it's Rosehart Stock and Options Mastermind Group. And yeah, everyone, thanks, Eric. Appreciate that. Thanks, James. Thanks, Omar. Everyone, have a good night. And remember, the secret to unlocking a wealthier you: 3 levers. Spend less, earn more, and maximize returns on the difference. Have a good night, everyone.